Hello everyone. In this module 3 we'll discuss gross domestic product, and which is also known as GDP. We'll look at also national income, and we'll look at how you measure GDP and why it's important and why it's so popular around the country. The GDP is the gross domestic product. It is, always remember, it is the dollar value. It's not how many items you are producing. It's impossible to calculate all the numbers. There are millions of different products. So the best way to understand is it is the dollar value of all goods and services produced within the country. That's very important. It's what is produced outside the country is not included in the GDP of another country. So whatever you are producing, whatever the country is producing within the border, that is called domestic. So that's why it's called gross domestic product. Every word has a meaning. So everything that's produced within the border within a given period of time, it's annually, and also it's calculated quarterly. Quarterly means 3 months, annually means 12 months. So there's 4 quarters in 1 year. So every quarter you get a revised GDP numbers, which is the dollar value of all goods and services produced within the border of the country. So you also have to understand that you cannot double count something. So the GDP is also calculated based on value added basis. So for example, a car engine is produced in Germany and they sold it to Mexico. Mexico put the body together and then they shipped the car to a dealer in Atlanta, and the dealer added its markup and sold it to you for $30,000. Now, the entire $30,000 cannot be included in the US GDP. The German portion will be part of German GDP, which is the engine. That cannot be connected to Mexico. Mexico is only producing the body, so they will calculate the value of the body. So let's say engine is 10,000, body is 10,000. So that's $20,000. Now Mexico will only count 10,000. German will only count 10,000. Now then the car is sold to a dealer to Atlanta for 20,000, and dealer marked it up to $25,000 and sold it to you. So the US share is only what the dealer is adding. Let's say it's $5,000. So when you calculate the GDP, you can only take 5,000 from that car. The other 20,000, 10,000 belong to Mexico and 10,000 belong to Germany. So now if you take the entire 25,000, Mexico takes the entire 20,000, German takes 10,000, so that's a huge inflated GDP number. So that's why it's critical. Whatever is your value added to the product or the service. That's why GDP is the value of all goods and services produced within the country and no double counting. If some other country has already counted, you cannot do that again. You have to deduct that when you calculate your GDP. Why GDP is important? Because it shows how the economy is doing. Every quarter we get the GDP figure. It tells you how the economy is doing. If for 2 consecutive quarters GDP is going down, the growth rate is going down, then we are officially into a recession. So that is the part you have to understand. These numbers are very, very important to understand where the economy is going and what the government should do and what kind of policies government is going to adopt. So in this chapter we'll be focusing on this. So there are PowerPoint slides, and there are other videos you should watch, and then there are exams and tests designed for it. So at the end of this end of this module, you should know all about GDP and how it plays a role in the economy.